Good morning, everyone. We are waiting for our second speaker to join. She has a challenge with the network. Apologies about that. Can you please give us 2 minutes? Then we will start. Thank you. Okay, good morning, everyone. Before we start, can I see the thumbs up if you can hear my voice? Because I see on the chat that they're struggling with sound. Okay. Those who are raising your hands, I'll take it as the thumbs up that you can hear the voice. We shall begin with any challenges. Thank you, Andrew. Thank you for all the thumbs up. And our second speaker just joined now. Good morning again, practitioners, consumers, managing agents, attorneys, FIC, PPRA, and our stakeholders. Thank you for joining. Today's session will focus on two important topics: money laundering trends and typologies within the property sector. And what we want to know today from the FIC is what kind of report does FIC receive on, regarding these measures of money laundering and trends, and what methodologies are used to assess same. Why criminals target real estate sector to clean their money. And the speaker today will highlight money laundering cycles and also dive into the typologies detected. And also, the second speaker will touch on a very important topic, I think, where we need awareness on. And this is the PPRA inspection process in terms of Property Practitioners Act. We want to understand from our speaker what we mean when we talk about inspections. What are those three categories of inspections the speaker will take us through? We want to know the scope. And I think the other question that we would like to be answered today is who should be inspected, considering that the mandate is broader now and we've tapped into other categories into the sector. We are privileged today, colleagues, to be joined by our expert speakers. The first speaker coming from PPRA, her name is Ms. Dineo Mphahlele. She is the Executive Manager of Compliance, Audit, and Inspections. And, I think some of you, if you've worked with her, if you've been in the industry for more than 20 years, you will know Ms. Mphahlele. She's an accomplished executive with 20 years of experience in this sector. She holds a B.Proc degree from the University of Johannesburg, a Master of Law in Corporate Law from the University of South Africa, a postgraduate diploma in strategic management and corporate governance. And she also has a certificate in money laundering control and ethics from Stellenbosch Business School. She's also our ethics officer here at the PPRA, and she deals with all the whistleblowers that come through. If you want to find out more about how to, lodge a complaint as a whistleblower anonymously, Ms. Dineo Mphahlele is your person to go to. And, previously, she also served as a business operations executive in acting capacity. And she's also the chairperson of the PPRA Pension Fund Scheme. Currently now, She serves as Executive Manager of Compliance, Audit, and Inspections, also an ethics officer, but she's not alone, colleagues. She will be joined by our second speaker who comes from FIC. Her name is Ms. Ofani Mukwebo, and she is an analyst at the Financial Intelligence Center. Ms. Mukwebo is a strategic and operational intelligence analyst. She joined the FIC in 2020 as a graduate trainee and progressed to her current role through her dedication to financial crime, intelligence, and data analysis. Ofani develops strategic intelligence products that identify crime trends, patterns, and emerging risks to support informed decision-making and also to combat financial crime. She holds a BSc in Pure and Applied Mathematics, an honors degree in Applied Mathematics, and is a certified SAS-based programmer and a ACFE certificate holder. And I think it was important that I do that so that because we are touching on important topics and very high level, so that you can see that the people who are presenting are expert and who will be able to take your questions and we tackle them. It's going to be an engagement that is open so that we participate in the discussions once they are done presenting. And Ms. Mukwebo will not be alone today. She will have one of her colleagues coming from FIC. His name is Mr. Philip Langenhoven, and he will join us shortly as well. And I think in the Q&A, you will hear his voice now and then coming in to assist, especially with questions of compliance, because I know some of you might want to know, about FIC compliance and the status thereof today. So maybe before we begin, I just want to do a few housekeeping rules. You will be muted. Don't be alarmed. You will be muted so that we allow the speakers to present and they finish so that we don't disturb the recording. And everyone who raised your hands, we will take the hands after the presentations. We see you. If you have any questions and you don't want to raise your hand, you can put your questions on the Q&A space at the menu bar at the top or on the chat section. It will be on the right. And for any other comments, you can put them there. Or if you want to communicate with your other colleagues to network, you can do it on the chat to exchange numbers and, to build business. And we will address all of the questions after the two speakers have presented. The webinar is being recorded, and the recording and the presentations will be shared with everyone who's in attendance after the sessions. I will also put the recorder on our YouTube PPRA TV in 48 hours. But without any further ado, I'm going to allow our first speaker to come through. I'm going to stop sharing the social media handles. Ms. Dineo Mphahlele, you can take us through your presentation. You can try to flag on your side. Thank you.
Good morning, everyone. Morning, Naledi. Thank you for this opportunity to present on the PPRA inspection processes. And thank you everyone for attending as well so that we can engage and answer any pertinent questions that you may have or clarity-seeking questions that you may have regarding inspections. As indicated, I'm the executive manager in the Compliance, Audit and Inspections Department. I head two divisions, which is Compliance Audit, and also we have inspections. So today I'll only focus on inspections processes as indicated by Naledi. So I'm just going to put it on the slide mode. Okay, can I check if everybody can see the presentation before we proceed?
Yes, we can see it.
Thank you so much. Is the presentation moving? Can I have that confirmation as well?
Yes, it is moving.
All right, thank you. Thank you, everyone. Thank you, colleagues. The presentation will really focus on the inspections area. But by way of introduction, I'll just reaffirm our mandate as the PPRA. Our mandate really is to regulate, is to promote the conduct of property practitioner, is to issue fidelity fund certificate, is to prescribe the standard of education and training, to manage and control the property practitioners fidelity fund, to ensure that we fulfill the imperatives of transformation. So that is what is provided for in the Act, and those are the provisions that have been empowered, that are empowering the PPRA to do what we are supposed to do as per the Act. So just in a nutshell, these are the regulations that we need to comply with for purposes of compliance, education requirements we have to comply with, and all of these, they do form part of the inspection. I will also refer to this at the later stage. So for purpose of regulation, we have to ensure that we are compliant as property practitioners insofar as education, training, and development. Transformation, we have to implement the transformation imperatives. And more key, and which is more the primary intention of the legislation of the PPA, is to the protection of the consumers. So we are required to ensure that in our transaction, we are mindful of the protection of the consumers. Our legislation is more consumer-centric. You will see from the objects of the PPA is that one of the objects is to provide for the protection and promotion of the interest of consumers. We have also are required to regulate the conduct of the property practitioner in dealing with consumers. And we also require to ensure that we protect the consumers from undesirable or unsubstantiable sanctionable practices. We have to ensure that we inform and we educate the consumers about their rights. And as we do conduct inspections, we will have to ensure that the consumers are able to certify, to say that I have seen an FFC from a property practitioner and it was displayed in their offices, and the consumer can be able to inspect it. And also the property practitioners may not oblige or encourage a consumer to use a particular service provider. And these are all the provisions that are contained in there. Insofar as the broader mandate, I know that Naledi has made reference to, this is the sectors that has been included in terms of the new PPA. We have estate agents as a separate sector. We have auctioneers. We have bond originators, HOAs, insofar as the performing functions of the property practitioners. We have managing agents. We have property facilitators, business brokers, property development, timeshares, property advertising platform. We also have attorneys, employees. So those are the sectors, and they are separate. Even their compliance requirements are separate. In terms of the inspections, when we come to section 24, this section authorizes the CEO to appoint inspectors. The inspector's main function is to ensure compliance, is to monitor compliance, that as property practitioners, we are compliant with the provision, with all the provisions of the Act, together with the regulations and the code of conduct. So in terms of the inspections, we have 3 categories of inspection, and they are also outlined under section 25. So I'll start with section 25.1 and then proceed to section 25.2 and section 25.3. And you'll see that they are very distinct. And there are also different requirements insofar as we perform those inspections. For example, when we do inspections in terms of section 25.1, which then authorizes us as inspections department to monitor compliance, it actually says that an inspector can then enter a premises without a notice or without scheduling an inspection. So this one empowers us to do unscheduled or inspections where we just rock up and then we say we're going to conduct an inspections in terms of section 25. In this case, you are not necessarily required to provide a notice. We just need to come, but you must adhere also to the provisions of the Act. The Act also set out the times and the periods within which we can conduct inspections. So Section 25 is a little bit broader because it gives us the authority to enter and conduct an inspection insofar as checking whether there is compliance with the provision of the Act. But what is required as well is that at the time when we conduct that specific inspection in terms of Section 25(1), it must be within a reasonable time. I cannot, as an inspector, come and say I want to conduct an inspection at 7 o'clock in the evening. That is not allowed. The inspection, I cannot say I'm coming to conduct an inspection over the weekend. That is not allowed. So the days are prescribed. The times are also prescribed in terms of that. Though that there is no requirement in terms of this specific provision that I must send a notification, but there are limits to that in terms of the reasonable time of conducting an inspection and the days of which we are allowed to conduct an inspection. So in most cases, we actually use Section 25(2). Section 25(2) is where now we are then required as inspections department to notify the property practitioner. What we need to do is to notify the property practitioner in advance. In this case, we have to send a notification, and that notification must be in writing. So that is the prescripts of Section 25. And this is the one that we use most, if not 90% of the time. We send a notification at least 5 days before, requesting a property practitioner to prepare certain documents that we actually want to verify or we want to test or assess. So this is the one that we use, but also there are limits to it. It requires us to say we have to send it in advance. So we have to give you enough time as a property practitioner to prepare. And we also have to send that notification in writing. So those are the two that we mostly use. Then coming to the Section 25(3) inspections. This one is the one then that must then be accompanied by a search warrant. A search warrant can only be issued by a magistrate or a judge. And this one is where now we'll be conducting a search or a seizure. Maybe some of you have heard about it from the Criminal Procedure Act. So this has been adapted into our Act. However, we cannot just go and conduct search and seizure where we don't have a search warrant. A search warrant must have been issued, and before even it's issued by a judge or a magistrate, there are certain elements that we have to comply with as an inspector. And this information then must be provided under oath. For example, there must be reasonable grounds for us to asking the magistrate to issue a search warrant of the fact that there could be a contravention of the Act. Number two, we must actually inform the judge that there is sufficient information that makes us think that there is a contravention of the Act. And also that it is necessary that the search warrant be issued for us to be able to enforce the provision of the Act. So we have to actually substantiate this application. And once the magistrate is satisfied with the information that is provided for, and that the search warrant can be issued. And insofar as the search warrant, it has its limitation as well. It must contain the time within which the inspections or the search can be conducted, and it also lapses, and it also have conditions in terms of how it's going to be executed, which will then be outlined or detailed from the search warrant itself. So these are the three types of inspections that we have currently are allowed in terms of the provisions of the Act to conduct. Most of the time we focus on the Section 25(2), as I have indicated. And also before an inspector can go to and conduct an inspection, I have indicated that Section 24 allows the CEO to appoint an inspector and issue an inspector with an inspection letter or an inspection identification. So before an inspector can start conducting an inspection, they must identify themselves. They must indicate the purpose for which they are there, and then present that identification letter to confirm that they are from the PPRA and they've been authorized to come and conduct an inspection. So the inspection for the purpose of the PPA and for us as an inspections department, our inspection will include an investigation. And I want to also for you to be mindful of the fact that we have investigation and enforcement department. The investigation and enforcement department is responsible for investigations. But for this purpose, in line with Section 26, which talks to the compliance notices, it allows us to conduct an inspection or an investigation with the purpose of issuing a compliance notice for minor contraventions. So if the contraventions are of a serious nature or of a substantial nature, there can only be an investigation conducted by the enforcement department. As an inspection department, our investigation is only limited to a minor contravention and with the purpose of issuing a compliance notice. We also do a desktop audit where we then check our systems within the PPRA and see if all has been, for example, an audit report has been received, has all the agents within a particular property practitioner practices have been issued with an FFC, have they complied with the educational requirements? So those are the assessment that we do. And on the third one, where we do assessment and determination, we then can issue a request to say, property practitioner, can you send us this information so that we can do an assessment? And before we used to do something that we call self-assessment, and that is part of our inspections. So we don't necessarily have to go to the premises of the property practitioner. We can request information, we can assess and make a determination. In terms of the verification, this is a physical inspection. For example, we'll go and conduct an inspection, we'll ask for the FFC, see if the FFC are valid, if the FFC have been displayed in terms of Section 53 and other requirements. So these are more of a verification purposes. So our inspections, it's really informed by a number of factors. We have a large number of property practitioners that are registered. We have estate agents. And if you can also refer back, we have other sectors, about 12 sectors. All these sectors have to be inspected. And it will be very impossible for us to inspect each and every sector as it stands at the moment. In some cases, we have to look at the risk-based approach from a risk of inspection. So the risk-based would then be informed by complaints. For example, receive a complaint that there is a property practitioners operating illegally, or there is this type of complaints that have been received by either the enforcement department or the registrations department or any other internal department and say, inspections, can you please go and investigate or please go and inspect? There is this information that came to our attention. We want to verify the correctness of that information. And then as inspection, we'll have to go and conduct that. It will be adverse information that may be from social media or from any other platform where there is information about the practices or the conduct of property practitioner. For example, there was information that we received against a certain property practitioner who was practicing in the Northwest area, and they were taking clients' monies and they were not providing them with the properties that they have purchased. So we had to start the investigation from our side, and we collaborated with the police, SAPS, and then we are then started to make sure that the matter goes to court. So those are the adverse information that we pick up and then we run with them. And in some cases, it looks at the type of services that is being provided. and see the risk attached to the type, and then we then ask for information to see that how then can we assist property practitioners or ensure that we mitigate the risk and also ensure that we are able to implement the act in that process. Naledi has made reference to the whistleblower. We do also investigate where a person decided to go through the channel in terms of the whistleblowing, and then they want to whistleblow because they want to remain anonymous. With that, we will investigate, but however, the investigation, they will do preliminary investigation, but the final investigation will be done from the investigations department and enforcement department, in which case they will then have to refer the matter for adjudication. And we also look at the geographical spread and as well as the ordinary compliance inspections. These are then guided by the inspections plan that we then present before our ESCO, who then approve it so that we're able to ensure that there's sufficient budget for us to be able to conduct inspection for the particular financial year. In terms of our scope as inspections, and all of this, you will note that they're taken precisely from the provisions of the Act. And in terms of offenses, the contravention, that is Regulation 36, does provide, Regulation 38, sorry, does provide for the contravention or non-compliance. So with that, it provides for the fines that are attached to non-compliance. So as inspections, we don't necessarily come up with the type of fine that can be attached, but Regulation 38 specify those type of fines. For example, if there is a property practitioner who actually have not submitted an audit report, then there is a specific relevant provision that actually aligns with the fine that has been set in terms of the Act. So in terms of our scope, we do check on the fidelity fund certificates, and in other cases, because you may find that there are firms which has more property practitioners, then we then require that maybe, for example, the principal FFC, the firm FFC can then be displayed so that when we deal with consumers, they are aware that they are dealing with a valid property practitioner. So those are the things that we also check. We check as well as the trust account compliance. We check the financial reportings in terms of Section 54. For example, the submission of audit reports, the submissions of audited financial statements. We also check if the audit report or audited financial statements, there are any non-compliance that has been raised by the auditors. We check also the bank statements. In terms of the bank statement, we check the trust account bank statement, we check the business bank statements to ensure that there are no, in the business bank statements, there are no trust transactions that should go through that. For example, we check that if there is a rental that has been paid into the business, if there is a deposit that has been paid into the business, and those are the monies that have to be deposited in the trust account. So those are the transactions that we look at it, because there is a distinction between a trust account and a business account. So those are the things that we check for compliance. We also check compliance with the educational requirement. We have the CPD, we have exams, and those are the things that we also check. We also check for transformation compliance. We have Section 20 that talks to transformation. And we also check that is a person really trying to implement the imperatives as set by government insofar as the transformation. And what also is key and is important is Section 67. And I'll touch a little bit more on the Section 67 because it's very important. And I personally have received queries in terms of what is this mandatory disclosure form, and how is it completed, and why it must be completed. And those are the forms that we also test or assess if they have been complied with as part of our scope as inspections. So coming to the mandatory disclosure form, this is a very important form. Basically, when you look at section 67, it says that a property practitioner must not accept the agreement, the mandate, where the mandatory disclosure form has not been attached or signed. It is important because why the mandatory disclosure form? It is intended to at least reduce the disputes between the parties. You know that when you sell a property, at times there are defects in the property. And we do receive complaints where the consumers are complaining that I have bought this property. There are painted defects in the property. There are latent defects in the property. The seller knew about the property and they were deliberately concealed from me. And then there are those type of disputes that we have. So the rationale really is to make sure that there is transparency in terms of disclosure and also to limit the issues of misrepresentation. So we also, I think the legislation has also placed a duty also on the property practitioner to ensure that that mandatory disclosure form is there. And then when the contract is signed, it forms part of the contract. So the mandatory disclosure form forms a very important part of the contract. It doesn't invalidate the contract, but is integral to the contract. And also, it is important that when the property practitioner receives the mandatory disclosure form, as they then go through the contract, explaining the terms and conditions of the contract, they are also able to explain the mandatory disclosure form to the seller or to the lessor, because it's important that the lessor is informed or the purchaser is informed about the conditions of the property. So it is important that when we go and do an inspection, and this is one of the issues that we identify, that some of the contract have not attached the mandatory disclosure form. This open the property practitioner to a claim or a civil claim, whereby the purchaser or the lessor can institute a civil claim against the property practitioner, as well as the PPRA can then start or initiate the disciplinary action against the property practitioner, because that will have been a contravention of the Act. The Act mandates us as property practitioner to ensure that we include the mandatory disclosure forms. So in this slide, we're saying that no estate agent's property practitioner may take no estate agent may take a mandate involving a sale or a lease of a property without obtaining a mandatory disclosure form. That's number one. And where there is no mandatory disclosure form, you are, as a property practitioner, you may be personally held liable. For example, there will also be a person who lodged a complaint, and therefore we have to initiate a disciplinary action. And you will also note that on the mandatory disclosure form itself, it does not make provision for a lease agreement. However, when you look at section 67, it's very clear. It says that either a lease or a sale agreement, it forms part of the mandatory disclosure form. So you must have that document, despite the fact that the form is attached in terms of Regulation 36 is defective. But the Act, because the Act is the enabling provision, that is where we get our powers. So the document must be as such, it must include that. So we have noted this defect. However, what we are saying is that as PPRA, there is a division called Exemptions Department. And an exemptions department, that's where now a person wants to say they want to change the mandatory disclosure form and to adapt it to meet their own requirements. They can do that by submitting an application, an exemption application, by completing an E1 form and stating that I want to make an application to be exempted from this provision. I have developed my own mandatory disclosure form, which meets my requirements. And then thereafter, this will then be considered by the exemption committee. They will look at the proposed mandatory disclosure form and look at that is compliant with the CPA Consumer Protection Act, look at that it's compliant with the PPA itself and the regulation, and thereafter it will be approved that it can be used by the applicant being the property practitioner. So it is very important to take note of the mandatory disclosure form. Is one of the areas where we test for compliance, and we also make sure that it is the mandatory disclosure form that has been prescribed in terms of the Act. And if it's not, it must be the one that you have been exempted. And then we will then confirm by the exemption letter that I have been exempted. I'm using my own, and here's the exemption letter that was issued by the PPRA. And one other thing also that I want to touch on the mandatory disclosure form, and also try to bring clarity insofar as the warranties or the guarantees. A mandatory disclosure form, if you look at the provisions under Regulation 38, they are very much clear. First of all, they also state that this is called a condition report. It doesn't necessarily mean that this is a guarantee. You're just presenting the property, the status of the property as it is, because you need to disclose. This is important for one to take note that this is not a guarantee or a warranty, but it provides with the condition of the property so that the parties can be in the same understanding of the nature and the status of the property. So this is important also as property practitioners, that we are able to explain to the parties, particularly the purchaser or the tenant, so that this document cannot be taken that it's a guarantee. But however, in terms of the definition, it says that the person, the owner or the property practitioner confirms that they certify that this information that has been provided to the purchaser or the tenant is correct. So they have disclosed all the information that is necessary to disclose. There is no deliberate concealment of any defects in the property. There is also no misrepresentation. And also the same regulation, the Regulation 36, it makes reference to the fact that it actually doesn't prohibit the purchaser from actually carrying out a home inspections. I know there are institution or organization that provides such services, where a purchaser can appoint an institution which are called home inspectors or home inspections, and they can then go deep into checking the status of the property before they actually sign the contract. And that is also provided for in terms of Section 67.5, to say that it brought about property inspection, where a purchaser on his own account can appoint a home inspector or an inspector to confirm the status or the state of the property before finalizing the transaction. So, for example, you appoint a home inspector or a property inspector to look at the rising dam, to look at the leaks on the roof, to look at electrical faults, if there is any poor insulation, plumbing issues, or any other issues, or even issues that are related to municipality, the bylaws, the rezoning of properties. So all of that, any other person can conduct an inspection so that they are well informed or in terms of the status or the state of the property. So I think I will end here Naledi, that is my presentation, just to give an overview and also elaborate on the inspection process. Thank you very much for the opportunity.
Thank you, Ms. Mphahlele, for that presentation. Let me welcome Ms. Ofane Mukwebo. You can you can stop sharing, Ozineo. Ms. Mukwebo, you can share your presentation so we may begin to our second topic.
Good morning, everyone. I am just trying to flag my presentation. And please let me know when you can see my screen.
Yes, we can see your screen.
Okay, thank you. So as already introduced, I am Opane Mukwebo. I am a strategic intelligence analyst within the monitoring and analysis division at the FIC. So maybe just before we begin, I would just like to set some context regarding today's presentation as well as my role. So my perspective will be coming from the work that we do at the FIC, where we analyze information that is reported by accountable institutions, including the estate agents, through the regulatory reports as per the FIC Act. So this means that we have a unique vantage point rather than just focusing on an individual transactions or specific businesses. We are also able to observe broader patterns, trends, behaviors, typologies that emerge from information reported across the sectors. So the findings that we'll be sharing today, we are basing them on the collective analysis of these reports that we have received, and we intend to provide a high-level picture of the risks, the methods, as well as the indicators that we are currently observing within the property sector or the estate agents. So for those who may not be familiar with the FIC, so the FIC serves as a national financial intelligence unit. So our role includes receiving and also analyzing financial information to identify possible money laundering, terrorist financing, proliferation financing, and also other financial crimes. And we disseminate that intelligence to law enforcement agencies. It can also be intelligence services, supervisory bodies, and other relevant authorities. So into the presentation, I will focus on money laundering trends and typologies that we have identified in the estate agency sector. So throughout the presentation, you may hear me refer to estate agencies or estate agents more often than property practitioners. So this is just because under the FIC Act, estate agency are listed as accountable institutions under Schedule 1, Item 3. And most of these findings that we present today are based on a suspicious and unusual transaction reports that they have submitted to the FIC. So although these findings are primarily based on the reports that are submitted by estate agents, we can all agree that many of the money laundering risks and typologies, they are applicable to a wider property practitioner sector, given the common role that property practitioners play in facilitating the property transactions. And also that we know criminals generally seek to exploit the vulnerabilities within the property transaction rather than a specific role player within the sector. So this will be an outline of our presentation. We will touch base on the analysis of the regulatory reports that we have analyzed, including the methodology that we used to mine those reports. And we'll look at the statistical analysis, just geographical locations of the reporting agencies, high-level overview of the profile of those reported individuals. Then we will move into understanding the risk. And after that, we will discuss the main money laundering typologies that we've identified. And these typologies, they help us show common methods, also behaviors, as well as transaction patterns that criminals may employ in laundering their proceeds of crime through the sector. And we will also look at the detection as well as controls. And finally, we will just conclude with some takeaways as well as some references that you can go read or learn more about the work that we do as the FIC, which I think it will be a useful addition after this webinar. So this slide explains the methodology that we use to mine or identify the trends and typologies in the estate agency sector. So as the FIC, we receive different types of regulatory reports from accountable institutions. We have reports that are submitted under Section 28. So Section 28 is the cash threshold report, which we normally call as CTR. So these are reports where any transactions where it is 49,999 or above is paid or is received, it must be reported to the FIC. And we also have Section 28A, where if there's a property or there's funds or assets that are owned or controlled or they are linked to terrorist or terrorist organizations, or maybe it could be just a sanctioned person or entity, that must also be reported to the FIC under Section 28A. And we also have Section 29 reports, which are our suspicious and unusual transaction reports, which we normally call STR or SAR. And also TF, transaction terrorist property financing report. And so these ones are transactions or activities that if there's any suspicion or any unusual behavior that appears to be linked to possible money laundering or just suspecting money laundering or terrorist financing or any criminal proceeding that maybe you may know, they must also be reported to the FIC. So this is regardless of any amount that may be involved. There is no threshold here. They just need to be a suspicion that you have noted. So we analyzed the reports over the 3 financial years, which is 2022-2023 to 2024-2025. So the 2025-2026 financial year is not included in this presentation due to the fact that we are still in the process of analyzing that data. So these reports that are filed, they are filed where there is a suspicion relating to proceeds of unlawful activities. As I've indicated, it could be money laundering, terrorist financing, or any sanction-related offenses. Therefore, the information that we analyze reflects suspicions that are identified during the course of the business. And we mine these reports to identify the key trends, the risk indicators. So this includes looking at the profiles of the individuals, the sources of funds, their financial flows, the payments methods that have used, the modus operandi that they've used also in conducting those suspicious transactions or activities. So by analyzing these factors, we are also able to better understand how the estate agency sector may be exploited or it may be exposed to money laundering risk, and also what mitigation measures or red flags may assist the sector in detecting and also reporting the suspicious activities and also safeguard their business. So this is an overview of the regulatory reports that we have analyzed over the 3 financial years. So starting with the reported value, we can see that the total reported value on this graph, they have increased significantly over the 3-year period. So the overall reported value rose from over 461 million in 2022-2023 and to 611 million in 2023-2024, and substantially it increased significantly to about 1.4 billion in 2024-2025. So we also observed an increase in terms of our Section 29 reports, which are our suspicious and unusual transaction report, which they have increased approximately from 71 million in 2022-2023 to 894 million in 2024-2025. So this may indicate that estate agencies were identifying increasingly high value transactions that were warranting reporting or that warranted a suspicion. But this also shows you how large value of funds are busy moving through the property sector, which is one of the reasons it stays vulnerable to money laundering, because criminals are able to move large amounts of money through this sector. So when looking at the number of reports that were submitted, we identified that Section 28 reports or cash threshold report remained a predominant report type, accounting for the majority of the reports and also transactions across the 3 financial years. So these reports are also reported based on the cash threshold, as I've indicated, which is now 49,999. So previously it used to be 24,999 before the FIC Act amendment in 2022. So, however, when we looked at Section 29 reports, we identified that there has been an increase from 252 reports to 589 reports in 2024-2025, which it suggests growing awareness of suspicious transaction reporting obligations within this sector. And also another interesting observation, if you can check on this graph, we noted that while the number of transactions were decreasing over the reporting period, the overall value was increasing significantly. So this means that fewer transactions were reported. However, those transactions involved substantially larger amounts of money. So what we have noted is that the estate agency sector are indeed reporting increasingly higher value transactions. And we also analyzed the geographical locations of the estate agencies that submitted regulatory reports. And the purpose for this map was to identify where reporting activities is occurring within the estate agency. So through our analysis, we identify concentration. If you can see there, Gauteng province, within Western Cape, KwaZulu-Natal. So these three provinces accounted for a higher volume of reported transactions. So we did receive also reports from other provinces as well, except the Northern Cape. So what this tells us is that reporting is also not just limited to a single province or a specific metropolitan area. So these reports are being submitted from multiple regions across the country, which demonstrate the money laundering risks that may be encountered in various property markets or also locations. So the concentrations of these reporting agencies, mostly in the Gauteng or KZN, Western Cape, may also reflect maybe the presence of larger property markets in those areas, or there are higher transaction volumes, or there's also greater awareness of reporting obligations amongst the estate agencies in those regions. So from a strategic perspective, this geographical analysis, it also assists us as the FIC in terms of understanding the reporting patterns, identifying the areas maybe where awareness initiatives may be required, and also assessing whether reporting trends corresponds with the broader property market in general. And on the slides, we analyzed the reported individuals, where we just looked on the genders, the age groups, also the nationalities just in high level. So we just used information that was available to us, because we get to a point sometimes where incomplete information is provided to us, which definitely hampers with our analysis. So we always encourage correct and accurate reporting all the time, because it assists us with our analysis and to be able to identify trends and also the profile in a broader picture. So when we look at the nationality, the majority of reported individuals were South African nationals, which we can say maybe as expected. So about 75% accounted for those subjects. We did also observe some of the foreign nationals from a range of jurisdictions. And in terms of the gender profile, we identified that males accounted for a larger proportions of reported subjects than the females across the reporting period. So when we analyzed the age groups, we noted that reported individuals were economically active adults, which were particularly falling between 31 up to like 60 years, which is not really so surprising, because these age groups are more likely to be involved in property ownership, business activities, investments, as well as decision and high value transactions. And now moving into the risk. So before maybe I can mention why criminals may target the property sector, is that property investment remains one of the most attractive sector for money laundering. And this is globally. It's not just in our country, but it is a global risk. So what makes it so attractive to criminals? So there are various factors that we note, which is property transactions. They often involve large amounts of money. So it makes it vulnerable to movement of criminal proceeds. So criminals may want to use property purchase to make their funds appear legitimate. Another reason could be that high property values can help conceal the true source of wealth, and also because there are several parties and intermediaries involved in these transactions, such as there are estate agencies, there are attorneys, there are conveyancers, there are buyers, there are sellers, there are companies, there are trusts, and yeah, the list goes on. So this can create complex structures and also opportunities for criminals to disguise who really is behind the transactions or where the funds are coming from. And also property can also be used to store our value. We know that property is seen as an investment, which can generate income over time. So also that asset conversion come into play. So once illicit funds are used to purchase the property, the asset can be sold, or it can be rented out, it can be transferred to another individual, or it can be used to support other financial activities or making the proceeds appear more legitimate. So these are just some of the reasons why property sector remains vulnerable to money laundering. And before we move to typologies, I just thought it would be important for us to understand the money laundering cycle. So money laundering consists of 3 stages, which is placement, layering, and integration. So for this one, we will try to use examples of 2 companies, which is company Y and company X. So before we go into placement, money has to be derived or collected from somewhere. So criminals will acquire funds maybe from proceeds of fraud. It will be proceeds of fraud. It will be maybe drug sales or drug trafficking, maybe human trafficking. It could be corruption. It could be cash in transit, and yeah, so forth. So then in stage 1, they will now try to integrate that dirty money into the financial system. So they will be trying to separate the illicit source of those funds. So here, company Y is the one that receives the dirty money. And when it receives the funds, they need to create structures or layers, or they need to try and hide the true source by trying to make it complicated to trace back to where they actually got the funds. So company Y will now, on stage 2, which is layering, it might create a false invoice. So that invoice may be for consulting services, whereby it says company X provided us with consulting services, now we must pay them. Then company Y will now make a payment to company X. Then now company X has received funds from company Y, let's say for instance 1 million rands. So in actual fact, there were no consulting services that were provided. So that invoice was fictitious, but the money went into company X. And you, as you just check maybe the bank statement of company X, you will initially thought, oh, this is legitimate income or business transactions because it will be appear as payment for consulting services. So now company X has received the funds which appear legitimate. So again, company X can send those funds back to company Y. And now they may, instead of labeling it as consulting services, they may say it's a loan that we're loaning to company Y, or it's investors' funds. So now the same money has acquired a new meaning or a new explanation. And the link now to the original fraud will be hidden between their fictitious invoice, their contracts, their loan agreements, their intercompany transfers. So now this creates multiple layers, hence the term layering. So in the last stage, because they have now managed to introduce those illicit funds into the financial system. They have created multiple layers to try complicate the traceability of those funds. Then now they will start purchasing properties. They will start maybe investing So the criminals now start using those funds with much lower risk of suspicion, because when you have to go back to check where that money comes from, you need to go through layers and layers that they've created. And moving into the typologies, this is just a list of typologies that we have identified through our analysis. So we'll dive into each one of them in the coming slides. So this typologies represents common patterns, the behaviors, and also transaction methods that repeatedly appeared across the reports. So we noted there were a lot of unexplained sources of funds, there were high-value cash property purchases, there were third-party payments, there were beneficial ownership concealment, there were requests for refunds, foreign and offshore ownership structures. There were cryptocurrency-related purchases, which also involved other unusual payment methods for property purchase. There were also customer due diligence avoidance. So the first typology would be unexplained or unknown sources of funds. So this one was a very common typology that we have identified through our analysis of the STRs, where the central concern was that the clients were unable, or they were even unwilling and reluctant to explain where the funds were being where the funds that are being used for the property purchases originated from. So in many of the reports we analyzed, estate agencies, they raised concerns because the client could not provide a reasonable explanation for their wealth or even their income. So in some instances, clients were inconsistent with the value of the transactions and even their profile. So you find that a client maybe earned 5,000 rands, but they're coming to purchase a property that is worth 1 million rands in cash. And there is no known of any other activities that maybe they do on the side, or any business. They have no links to any businesses. So the income that is known, that is legitimate, is that 5,000 rand that comes in a month. So that is very questionable. So another trend involved newly established companies that were purchasing luxury properties with no bonds. There were no financing in place. However, the available information regarding the company's businesses, the financial history was very limited. And we also identified transactions that were involving multiple streams from different sources. So where the relationship was also not clearly established between the parties. So where the source of funds cannot be reasonably verified, or where there is an explanation that is inconsistent with the client's profile and circumstances, here we note that money laundering risks, they increase very significantly. So it is important to understand not only where the money comes from, but whether the source of funds is reasonable and is it also consistent with the client's profile. Then another typology is high value property purchases in cash. So in these reports that we analyzed, we identified situations where clients were purchasing luxury properties in cash, despite there being limited information that was available to support those sources of funds. So in some cases, clients that showed affordability concern, like I made an example with an individual that earns 5,000 rand, but they're managing to purchase a property worth 1 million rands in cash. So another concern was involving significant deposits that were made into Attorney Trust accounts where the origin of the funds could not be verified. So while we know that attorneys do play a legitimate role in property purchases, criminals do try to find ways to attempt to use these accounts to create legitimacy of their funds if those sources of funds are not really properly scrutinized. So when assessing these transactions, it is important to look just beyond the fact that a client is paying cash, and maybe also ask questions like, is the client's wealth consistent? And also consider whether the source of funds can be independently verified, other than just relying on what the client says. So it's also important to note that it's not only a matter of cash itself is the risk, but the risk arises when the source cannot be adequately explained or verified, because that is where now the criminal proceeds may come into play. And the third typology was third-party payments. These ones, they also featured prominently in our analysis, where in these cases, the funds that were being used to purchase properties were originating from individuals or even entities that were not directly linked to the purchaser or the transaction itself. So some of the common observations, they included multiple EFTs from unrelated individuals, payments that were made from companies that appear to have no connections to the transactions, and also some payments that were made from unknown individuals or unknown entities. So these types of arrangements, they also make it difficult to establish who is actually funding these transactions and why are they doing so. So one example from our reports, it involved, there was a company that was intended to purchase a property worth 9 million rands. So initially the agreement was that this company would pay this property entirely in cash. Later then they decided, no, we will obtain a bank loan for a portion of a transactions, which was for 3 million, and stated that the remainder, which was 6 million, would still be paid in cash from other sources. So with them, to circle that balance, they then made 23 EFT payments from unknown third parties. So you can imagine 23 individuals are now making deposits that accumulates into 6 million rands. And none of those individuals were formally linked to the purchaser of the transactions. So when this client was questioned, it was said that they explained that they have made an arrangement with their clients as part of internal business arrangements that those clients must now pay this funds into this certain account, which is now going to the conveyancer. So, however, the relationship between these third parties and clients could not be clearly really established, which now raises concerns regarding the legitimacy and the traceability of those funds. Because now, how do you go about verifying the sources of funds from those 23 different individuals, which are not even linked to that property purchase? So from a money laundering perspective, third-party payments, they can create challenges because they complicate the audit trail. So criminals may use multiple individuals, companies to conceal the true source of funds and also distance themselves from the transactions and even introduce the illicit funds through seemingly unrelated parties, like an example that I just indicated. So some red flags that we can note is if there are different names on proof of payments, that should be a red flag indicator. Situations where the purchaser is not funding their own transactions and there is no reasonable grounds of explanation that is being provided. So this typology, it often overlaps with unknown sources of funds that we have discussed previously. Apologies. So another typology is concealed beneficial ownership. So this occurs when a person who ultimately owns or control or benefits from a property purchase is hidden behind complex legal structures. Like I've indicated, there are a lot of intermediaries that are involved in property purchases. So criminals also exploit that vulnerability. So one of the most common methods that we observed was there were complex trust arrangements that were being used. There were missing trust documents. There were trustees who could not be verified. There were trustees who were reluctant to even cooperate during the due diligence process. So we also identified the newly incorporated entities that were purchasing properties in cash, and as well as structures that were involving layers of ownership that did make it difficult to determine who ultimately controlled the transactions. So the key risk associated with this arrangement is that they can be used to conceal the identity of criminals or other individuals seeking to avoid scrutiny. So in some complex ownership structures, you may find that they are trying to conceal links to PEPs or political exposed person, or maybe even sanctioned individuals. And there were also requests for refunds and overpayments that we have identified. So Several common indicators that we identified here were there were deliberate overpayments, there were payments that were being made before approvals or agreement with the estate agency, there were subsequent requests that were made for refunds, and there were instructions that followed to say the refunded funds should be paid to a third party rather than returned to the original payer or the bank account that did send the funds. And in some cases, we noted PEPs were involved in these types of transactions. So there were one example that involved a PEP where this client was supposed to pay 5,574. So I would like you to pay attention to this amounts. So this PEP was supposed to pay in monthly levy 5,574, which is 5,574. But instead, this individual paid 298,482. So if you do the math, or if you can just check these numbers, you can see that some mistakes are indeed very interesting. So the overpayment was very substantial. So this client did later request for a refund, which was for an excess amount of 292,008 rands. So I mean, if we can say, if I'm making an honest mistake with this amount, maybe we would say if they had paid 55,574, maybe it could have been a mistake, or maybe 50,574, or somewhere around those numbers. But the two amounts of funds were just apart, or they were just odd with each other. So it's things like this that should prompt additional inquiries and also scrutiny, because they may also still use that, no, I was supposed to pay that amount to someone else, but I did pay into your account. So further scrutiny and inquiries should be indeed taken into account with these types of transactions. And another typology that we identified relates to offshore and foreign ownership structures. So with this, they involved property purchases where the sources of funds or ownership structures or the parties that were involved were linked to foreign jurisdictions, which now makes the transparency and the verification even more challenging. So some examples that were reported included foreign buyers that were linked to adverse media that were purchasing high value properties in cash, foreign refugees that were acquiring properties with limited information available regarding the source of funds, and also the transactions that were involving foreign PEPs. We also observed situations where foreign sources of funds were described as donations, but supporting documentation was either insufficient or it could not be independently verified. And so offshore structures, they do reduce transparency, and they also make it difficult to identify who ultimately controls or who really benefits from these transactions. So they may also create opportunities to conceal beneficial ownership or conceal the source of wealth, or they may also facilitate your tax evasion, or even more, move illicit funds across the borders. And moving into our second last typology, we identified crypto-related funding structures and also unusual payment methods here. So although these were less common from our analysis, other than some of the typologies that we already discussed, they represent a very emerging risk area for the property sector. So one case that we identified in our analysis involved two foreign third-party individuals. So this when the individuals that were not the client, but they were funding the client's purchase. So it was indicated that cryptocurrency was transferred from a high-risk jurisdiction to these two unrelated individuals. And then they subsequently made the payments to the conveyancer on behalf of the purchaser. So when they were asked to provide identification, supporting documentation regarding the source of funds, both of these individuals refused to cooperate. One of them even went into expressing concerns about whether the authorities would trace the bank account that was used in these transactions. So this circumstances really does raise a significant concern regarding the legitimacy and transparency of these funds. And another case example that we identified involved two female individuals who expressed interest in purchasing a property, and then they went into transferring the funds via PayPal within hours of expressing the interest of purchasing the property. So they did not even view the property, and the offer to purchase had not even been finalized because they just expressed interest like hours ago. So the agency of this payment, together with this use of a payment platform such as a third-party payment provider, it's really not commonly suggested or commonly associated with high value property transaction. So it also raises concerns regarding the purpose as well as the source of the funds. So from this example, there were also additional verification challenges that arose, whereby one female was like, they had lost their identity document, which now becomes the customer due diligence process. So their identity cannot really be verified. So one of the key challenges with cryptocurrency, I think we may agree, is that it makes it very difficult to establish the true sources of funds. And because depending on how the funds were moved or how the funds were converted, there may be multiple parties that are involved. There may be cross-border transactions. There is limited information that is available to verify the origin of the money. So this also creates transparency challenges. And our final typology relates to customer due diligence evasion or non-cooperation, which occurs when mostly clients attempt to avoid or delay or even frustrate the due diligence process that is required. So although this typology may not always involve unusual payment patterns or maybe complex structures, it is important because a lack of cooperation itself can be an indicator of money laundering risk. I mean, if a client is unwilling to provide the information necessary to understand who they are or where the funds comes from or who ultimately benefits from a transactions, that lack of cooperation itself, it can be a very significant red flag that do not need to be ignored. So also this typology overlaps with several of the typology we have been discussing. For an example, if this client is attempting to conceal beneficial ownership, conceal the source of funds, or even involve third-party payments, they may also be reluctant to provide proof that will reveal the true nature of this transaction. So as a result, non-cooperation should also never just be viewed in isolation. And having discussed the various money laundering typologies in the sector, it is also important to understand the practical warning signs that may indicate suspicious activity. So some of the red flags we have touched based on them while we're discussing the typologies. So I will not go through all of them. However, some of the red flags we noted were where individuals were disregarding normal transaction procedures, where clients avoid face-to-face meetings or engagements, and also the usual agency to conclude transaction. That may be to complicate or to bypass the due diligence process, and also clients or who sends funds before the contract or and then later request for refunds. And some of the red flags when there's a structuring of cash deposits below reporting limits or threshold. This is where if an individual now was supposed to make a payment of 200,000, then they send that amount into 30,000, 35,000, 45,000, or just 49,999 until it aggregated to the amount that they were supposed to send. So that is also a red flag. And where unemployed buyers also use funds from high-risk jurisdictions with source of funds that claimed to be inheritance and that cannot be even verified, that is a red flag as well. Where there's like adverse medias, such as previously exposed to home loan frauds or frauds that are linked with property purchases. And also, lastly, involvement of foreign high-risk jurisdictions. So these are just some of the red flags indicators to also look out for that we also identify when we perform our analysis. So, and last but not least, these are important key takeaways that I would like for you to remember. So if maybe you did not get anything from the previous slides, this will be very important for you to take note. So first thing would be, as a property practitioner, you are the first line of defense, and that means you play an important role in identifying and also reporting those suspicious and unusual transaction behaviors. So always remember, you need to know your clients. You are your business, you understand your business, you understand your market. So you need to know your client, which means that understanding who the client is, what their profile looks like, and whether the transaction is consistent with what is known about them. And secondly, you should make reasonable efforts to really understand the source of funds. So where the source of funds is unclear, where the source of funds is inconsistent, where it cannot be verified, this should raise concerns for you and should require further inquiry. And also, I made a point earlier when I was explaining the typology to say knowing the source of funds comes from knowing where the source of funds comes from may sometimes not be enough, but you need to also assess if that is consistent with the profile of this client. And another important point is to identify the beneficial owner. So it is not enough to only know the person that is appearing in the transaction, because property purchases, they involve, yes, a lot of intermediaries. So you need to understand ultimately who owns or who controls or who benefit from these transactions, other than the person who just comes in saying they're purchasing the property. And importantly, do not ignore red flags. So those are your warning signs. Do not ignore them. And always remember or always monitor those unusual activities, because a suspicion may rise at any stage. It could be from the initial client engagement, during a payment, or even when the refunds or changes to the transactions are requested. So finally, when in doubt, report those suspicious activities in line with the FIC Act requirement. And lastly, these are just some references that I spoke about earlier that you can go have a look from our FIC website. There are property sector risk assessment that our compliance and prevention division have compiled and published. And we also have some case studies and typologies that are published, and also we have our annual reports that are published each and every year after the financial year end. So that will be all from my side. Thank you for the opportunity, and I hope this was insightful.
Thank you so much, Ms. Mukwebo, for that fruitful and informative presentation. And I think we're going to get a lot of questions from this. I see Mr. Philip Langenhoven, he managed to join us. So we're going to tackle the questions that are coming from the Q&A. We're also going to take questions again on the chat. And I will give everyone access who raised their hands so they can also ask the questions. Slides we're going to share after the webinar. Recorder will be on PPRA YouTube in 48 hours. I have a question for Ozdineo from Sonia. Hi, I have a question regarding the MDF. This is mandatory disclosure form. Do we need to complete an MDF form for rental properties that we've been managing for more than 20 years? If so, would it be acceptable for the managing agent to complete the form during a property inspection, especially where the landlord does not live in town and is not readily available? Also, could you please clarify the purpose of the MDF form in relation to rental properties? Ozineo?
Thanks, Naledi. The purpose really, there's no distinction in terms of the sale or the rental. It's more on the property itself, and also making sure that the defects in the property are being disclosed, that the other party is made aware of any other defects that is actually in the property, so that they can then make an informed decision in terms of looking at whether they're able to occupy the property, or the property that has been rented provide for the purpose for which it was rented for. And also to look at, in terms of sale, whether the value of the property will be affected by this defect, or whether this property is habitual, is somebody that can be able to occupy the property without suffering any issues in terms of health issues at the later stage. So whether it's a sale or whether it's a rental, it's necessary that that information is shared between the person, either the tenant or the purchaser. So it's really important to actually bring to the attention of the other party that there are defects, and these are the defects. To the best of my knowledge, these are the defects that we have identified. So in terms of answering the question, that remember, when you sign a contract, and a contract is something that I believe it will be renewable on an annual basis, depending on the terms of the contract, or depending on the mandate. There is an end date and there's also a start date. So as soon as you renew a contract, it must be signed. So it means that there will then be an inspection that is conducted at that point in time, because it forms part of either the lease agreement or the sale agreement. So from time to time, as we take up a lease agreement, as we take up a sale agreement, ensure that there is individual mandatory disclosure form, because properties change. Sometimes you may find that things that happened 20 years ago, they're now starting to surface. How do you address that in terms of the contract that is presented? How do you then engage the landowner? Sometimes it may be maintenance requirements, it may be certain defects that can always be minor maintenance requirements that really needs to be updated, or there may be structural defects which the owner is even aware of. So that information from time to time, as you sign the lease or sale agreement, must actually be disclosed.
Thank you for that. Let me allow our speakers to drink water so long. I want to take this one to Mr. Philip Langenhoven. It comes from Liz and says, FICA evasion is common in real estate because stakeholders only request compliance documents at the transaction stage rather than before the OTP stage. Do you want to comment the issues of FICA?
Thanks, Danayo, and good morning, everybody. I think you need to decide at what time, at what time during the process does the person become your client, because the Act say that you have to identify and verify your client. So let's say, for example, you go and you show people a house. At that point in time, the person is not your client. And I know many years ago, we had a guidance product on that specific point, on at what time does he or she become your client. And yeah, as soon as the person becomes your client, then you have to do the necessary, identification and verification on that person. Which, and I'm not that familiar with exactly how the process works and what happens first, but yeah, when you receive an offer, I think, to purchase, that must be at that point in time you have to do the FICA part of the transaction. I don't know if that answers the question.
Thank you for that. They'll come back if they have a follow-up, but we're going to move right along before I go to the hands. Ms. Mukwevo, Mamiki is asking, if a property is being sold to a purchaser who is neither a South African citizen nor a permanent resident, and they intend to pay the full purchase price in cash, how do we verify the source of their funds? And what should the way forward be?
Thank you for that question. So maybe before I answer, I should just make a disclaimer to say the fact that a purchaser is a foreign national or it's a permanent resident does not automatically mean that the transaction is suspicious. So, however, if they're paying the full price purchase in cash, that automatically increases the risks and it does require enhanced scrutiny. So, as a foreign purchaser who's purchasing property in cash, so they present higher risk scenarios and also require enhanced due diligence. So you should often obtain sufficient information or documentation to understand and where possible verify the source of the funds. But if the source of funds cannot be reasonably explained or verified, then there are red flags that that are in place. So this is where the risks-based approach comes in. So we as the FIC, we cannot give you a list of documentation or a list of things to go look out for, because you know your business, you know your client. So you just make sure that you verify necessary documentation to verify that source of funds where possible. So if maybe the funds are being paid through a conveyance attorneys, the attorney, they are accountable institutions as well, and they also conduct their own due diligence. So they must not also just rely only on the attorney's process. So yeah, with the FIC obligations, we just say you need to know your client, you need to understand the source, you need to identify the owner where relevant, and also assess any risks. So I hope
Okay.
that answers the question.
Yes, yes, it does. And there was a similar question on the chat, what the previous attendee was asking. Anonymous was asking the same thing. Do we need to obtain proof of source of funds? So I think that one, it covered both of these questions. Anonymous, your question is now answered because it was explained now. Let me go to the hands. Janine, you can unmute and ask your question. Janine? Okay, maybe they're struggling with a mic. We'll move right along and come back to you later. Erna? You have access to the mic. You just need to unmute and ask the question. Erna, colleagues, can you hear me? Okay, maybe they can't hear me or they moved away from their desktop. Let's go to Evron. Evron, please unmute. Okay, they could be having the same challenges of unmuting. Who else is next? Nico. Who is speaking now?
It is Erna here.
Please ask your
I
question.
want to ask again, when become a person your client, when it is a seller,
On listing stage.
on listing stage, because we do it because when we get a mandate from the seller, then we
The client relationship.
when then the client relationship begins. So is it then your client, then you must FICA the seller, or at the transaction stage?
You want to know if we must FICA the seller, Mr. Langenven?
Yeah, if the person gives you a mandate, then that person is your client because you're going to deal with that person, and at that point you need to FICA the person.
Yes. Okay. Thank you
All
very
right.
much.
Thank you. Let's go to Evron again. Evron. Okay, let's go to Nico. Please unmute, Nico. Okay, not winning. Let's try Lynn before I go back to the chats. Lynn, you can unmute. Okay, I will come back to them. I have a question on the chat from Liz. This one, I think it's for Ms. Mpatlele. How often does the PPRA actually do compliance inspections? We've noticed that compliance is handled very unevenly across the real estate sector. So monitoring definitely needs to be stepped up and better regulated. Zino?
Yeah, thanks for the question. The compliance department, the compliance inspection is, we have a target, if I can put it that way. We set a target, an annual target that we set for the year. And as I explained earlier on my presentation, our inspections are based on complaints that we have received, are based on the request to go and conduct an inspection. So you may find that, and this is quite maybe quite a number of times that I've been asked the same questions, to say that we don't necessarily say this is how many times we're going to do an inspection at a particular firm, but looking at the information that come to our attention, we may even have to do a follow-up inspection, which is where then we go and check whether whatever was identified has been remediated. So we are guided by a number of elements or factors in terms of the compliance inspection, as well as any other inspection or investigation that we need to do. So I can't say for sure that these are the inspections that will be done in this year, but a number of factors come to play which guide us to say we have to go back there, or either we have done this inspection this financial year, there were no issues that have been raised, and then we look at other property practitioners or those that we receive information to say that you have to go and check there. But precisely, there is a number of times that I can say that these are the times that we do inspection. You may find that you are even requested to do inspection 2 following years, mainly because maybe, for example, there is information that came into our attention, or either at the time of the inspection, there were certain issues that we identified, and therefore we want to go back and recheck that there has been implementation.
Thank you for that. Ms. Mukwevo, Leah says, should a property practitioner do a CTR report when money is paid into conveyancer's trust account?
Thank you. I think I also touched base on it when I was answering the previous question. So, a conveyancer would be an attorney, right? So, if they make the payment to the conveyancer is also an accountable institution to the FIC. So the conveyancer or an attorney also has an obligation to file regulatory reports to us. So that conveyancer would need to perform their due diligence, and if the cash payment that is made is over the threshold of 49,999, they will need to file a CTR to us. And if maybe there is any suspicion relating to that transactions, then they will need to file a suspicious transaction report to us.
Thank you. Let's go to the hands. Maria, please unmute. I gave you access. Maria. Okay, let's go to Koti. Please unmute. You have access to unmute, Koti. Okay, maybe they can't see the button to unmute. Let's go to Bella. Bella. Okay, let's go back to the chat. Maybe they will sort out the unmute button on their side because you do have access. Tapelo on the chat, he says, I'm struggling to log in on my FIC website when I try to make a telephone call and it rings, but no one answers. I'm not sure if our speakers can manage, but maybe Mr. Langenhoven, do you want to try on that one?
The difficult one, but I'm hesitant to do that. But send the email to me. It's Philip philip.langenhoven langenhoven @fic.gov.za, and I will send it to the relevant people to help you. I cannot, help you, but I'll pass it on to my colleagues who will be able to help you with
All right, Tapelo.
specific questions on the system.
Okay, so Tapelo, I'll put the email for you on the chat. Just copy paste from there. I'll put it shortly now. Just look out for it. And some questions where I'm not reading, please note that it's duplicates and they've been addressed when other questions are being answered. Let's go to Adri. Says, if I operate from home, is an inspector legally allowed to enter my premises, Ozino?
Yes, thanks for the question, Naledi. Yeah, the provision of Section 25(2) allows us to say that if you are operating from home, and remember, look at Section 25(2), it excludes private residence. And I think that is the question that it's related to. It really excludes private residence. What we have done in order to accommodate that, we know that most property practitioners operate at their premises. So what we do, especially when we become aware that they're operating at their premises, we ask for a permission. We send a notification. First of all, we start by calling to say that, are you available for us to conduct an inspection? And that one then is followed by a formal notification. And hence I was talking to that you have to get advance notification so that you are able to prepare. And in terms of the law, it says that it excludes private premises, but we have overcome it by getting consent from the property practitioners, and therefore we have been able to conduct inspections in that regard.
Thank you, Osdineo. I see somebody who managed to unmute in number 3, Petunia. I'll go straight to you because 1 and 2, they're struggling. Petunia, ask your question. Petunia, you are unmuted. Can you ask your question?
Hi there,
Check your volume. We can hear you now. Just take volume up. Yes.
Okay, I think there's 2 of us
Okay.
online now.
Bella, I'll come to you. Let's
All
give
right.
Petunia a chance.
Okay.
Okay, in connection with this electricity certificate of compliance, firstly, I just need to find out how long is the certificate valid for? Number 2 is, who is supposed to change the information from the seller to buyer's name at municipality? Is it the buyer themselves or the attorney? So, because I find a lot of times municipality refuses to register the buyer, stating that the certificate has expired. And I'm thinking, I was just thinking that what if the certificate of compliance request is also included on the mandatory disclosure form for the agents to deal with it before the attorneys receive it? At least the agent will have more information or the right information before the attorney receives it. Thank you.
Thanks. I'm struggling to figure out if the question is regarding MDF or is it for compliance FIC. Maybe I'll allow both speakers because I'm not sure the jurisdiction will cover that electricity part to what extent, because the mandate might be different to what we do with municipalities. But maybe let me allow Ms. Mpatlele first and Mr. Langenoven. They will try their best, I think, to where they will try to answer.
Yeah, maybe from my understanding from the question, maybe it relates to compliance certificate insofar as the electrical system that is concerned within the property, if the property has electrical faults. And in most cases, when you sell, obviously one has to verify that the electricity or the electrical system is functional and it's something that can be used. So that could be part of the requirements as part of the sale. I think an attorney then will be able to identify, because with those compliance notice from the one, in my own personal knowledge, is that they have a period where they have been issued. And you look at it, if it's over a period of 3 years, obviously a new certificate has to be issued again so that we can confirm that in the current situation, the electrical is compliant, there are no electrical faults, and if the system can work properly, and then the buyer won't have issues to deal with that. It's one of the general requirements in terms of buying and selling of a property, because we want to make sure that there is a certificate of compliance, and it's something that is also attached there. And I think from that perspective, it may be required. I think the attorney will be able to advise in terms of the validity of the compliance certificate as presented at the time, because the dates also are of a critical nature, looking at from the time when the certificate was done, because it can be 3 years and down the line there have been issues with the electrical connection within that property. So the most recent certificate, I think, will be acceptable. And in terms of looking at the time frame within to say that what is the reasonable time, I think attorneys can be able to guide.
Thank you, ma'am, for that. Do you still want to comment, Mr. Langenoven?
No,
Or
I think this question related to what Danayo explained.
Okay, let me see. Koti managed to unmute. Bella, I'll come to you. I see
Yes.
you. Koti, please come in.
Thank you very
Lady.
much. Can you hear me?
Yes, colleagues, I
Okay.
can see you unmuted. I will come to you
Okay.
line by line.
Thank
Let's
you.
first with Koti.
Okay, thank you. I just want to make sure if I understood the answer previously given about if the money is paid to the attorney and that was cash above the threshold, what is the obligation on the estate agency? I understand that the attorney is supposed to report it because it's going into his account and they will see it physically there. But on the side of the estate agent that will probably know about it, but not see it in their account, do they have an obligation to also report it, or can they just be satisfied that the attorney will report it? And that's usually cash, like coins, paper notes, and traveler checks. That's what I'm talking about, not EFTs.
All right, that question is for Ms. Mukwevo, but I see a hand from Mr. Langenoven. Do you want to say something before she answers?
Yeah, no, it's okay. I'll answer. The answer is yes. You need to also report it because we're not sure whether the attorney is going to report it. So please, from your side, if it's 50,000 or more, please report it as well. Thanks.
Thank
I
you.
don't know. My colleague can add. Fanny, if you want to add, you're welcome.
No, I think that suffices, Mr. Philip.
Thank you very much.
Thank you. Let's go to Bella. You are unmuted because others are struggling to unmute. I'm not jumping you. I see someone unmuted. I'm gonna come back again to the lineup. Bella.
I was trying to unmute on my little block, and then I realized there's an unmute up at the top of the mic. So I got the two confused. Sorry about that. Okay, so I've got a two-part question, and I think the questions to both the ladies. So as an accountable institution, I understand that if I am a whistleblower, that it would be treated in confidence, right? Because ideally that's what you want. So my question is, what was the thinking behind the PPRA's new decision to publish my physical home address on my FFC? That's a big concern for myself as an estate agent, but I think probably people online as well. I'd like to know what was the thinking behind that, because then that takes the confidence out of the picture. Secondly is the E1 form, the exemption applications, where do we send that? And what is the turnaround time that we can expect? Those are my two questions.
Thanks for the question. Naledi, can I go ahead?
Yes, Daniel.
Okay. Yeah, the first question on the FFC is actually provided in the regulation. I was trying to look at the specific regulation, but I think, Naledi, we can come back to the client in terms of where in the regulation does it provide that. It provides for a geographical address, and hence the certificate has come out in that version. So
surely if I'm linked to the company address, I'm not understanding why, because I have to be linked to a company address, to a company FFC. So why is the company's physical address not on there as opposed to my physical home address? Because that makes me, just in this day and age with all the fraud and all of the stuff that goes on, it makes me a target. If the client suspects that I could have been the whistleblower, that now takes the confidence out of the picture. So I'm just coming from a precautionary standpoint.
Yes, I understand your point, but what I'm trying to explain is that we're actually implementing the Act. And I wanted to identify the relevant regulation that talks to us. And it has been prescribed in terms of the regulation. Hence, it has been done in that fashion. What I'll do is to find a specific provision. I hear you in terms of getting the business addresses, but at the moment, this is what we have been applied in terms of you have to comply with that specific regulation that I'm trying to find, but I'll definitely make sure that my lady
It's
communicates that
section
to you.
22, Osdineo. If they
Okay.
go to the regulation 22, they will see also the format and template of a fidelity fund certificate,
Yeah.
where it requires us as PPRA what to insert on that, because there's a part where it says also insert the geographical address of the holder of the fidelity fund certificate. But also because of the question of being a whistleblower and my address being on the FFC, because remember when you're a whistleblower, you're anonymous. So they wouldn't know, yes, they wouldn't be able to tell who lodged that complaint against that respondent at the time. Osdineo, back to you.
Yeah, thank you for that assistance. Is regulation 32. Remember as well as when you have indicated that you are a whistleblower, it will always be on an anonymous basis, and any person's identity will not be actually exposed, because that is the requirement from the Protected Disclosures Act, that a person who wants to remain anonymous, and that protection should be afforded to that individual. So it is provided for in the Act, as Naledi has assisted me, is Regulation 22. So with regards to the exemption, Naledi will provide the exemption department email, and then that information then will filter to exemptions department, and then it will then be sent to the committee to deal with that application.
Okay,
And
so turnaround
provided
time, do we have an idea of that?
From the website, Naledi, we should be able to have a section that
On
deals with
exemption.
exemptions, and then we can assist the client with the turnaround times as well.
Is it exemptions in respect to section 54, section 4? Which exemption are you applying for?
The E1 form.
The E1 form.
Yeah, I'm querying.
Okay, yeah. Okay, it's fine. I will share with you the email address, because they'll also have to assess, and it must go before the committee, and then they will advise on that one. I will link you with Advocate Deborah Weil, and she will assist you because she's in that department. I'll put the email address on the chat, or I'll put mine. It's pinned. If you can look at the pin on the chat, my email address is there. Please send me. I'll send you the e-form one as well to complete.
Okay, thank you very much. Thanks.
Thank you. Let's go to Maria. Okay, not winning Tabiseng. Okay, Carla. Okay, Tabiseng managed to unmute. Let's hear your question.
Morning. Thank you for this informative session. I just have I have a separate question. Considering the Directive 11 of 2026 that needs to be submitted at the end of July, I wanted to find out if you have a similar session planned or scheduled in respect to that compliant requirement in particular.
Sorry, can you say your question again? I think I got cut on my side.
I want to find out if a similar session will be held for estate agents dealing with the compliance in respect of the Directive 11 of 2026 for submission of RCRs.
Is it for PPRA? Dino, are you aware of this?
It's for FIC. I think Philip can answer it. Thank you.
Yeah, the RCR, the Directive 11 it's our directive, and you have to complete the RCR questionnaire. I'm not exactly sure, and I will have to go and check it. You're welcome to also send me an email, but there are different due dates for the different sectors. So I don't know, maybe you can just look in the directive. There would be a due date for when you have to submit the information.
Okay. And I'm saying, is it fine, that answer? We will just look out for them.
Yes, thank you.
Okay, so Carla on the Q&A space says, with managing agents now being included in the definition of property practitioner, would the registered agency with FFC and the unregistered managing agent, two separate entities working for the same client, be required to submit separate RCR, or is the registered agency only required to submit? So Mr. Langenhoven, one is unregistered, is a managing agent, one is registered as a property practitioner working for the same firm. Do they need to submit RCR?
Okay, let me just explain. I think it's a very important question. At the moment, item 3 of Schedule 1 of the FIC Act refers to estate agents. In other words, those people who were registered as estate agents under the Estate Agency Affairs Act that has now been, it came to an end. I don't know when, but in other words, other property practitioners doing other things that an estate agency business as described in the old Act are at this point in time not accountable institutions, do not have to register, do not have to submit RCRs. I don't know if that answers your question, but to add to that, each and every separate accountable institution needs to submit the RCR. But like I said, it's not necessary for non-estate agents at this point in time are not accountable institutions.
Okay, thank you so much. Let's go back to the hands and let's try Maria. Please unmute. Okay, you're not winning. Let's go to Maite. Maite.
Oh, yes. Thank you very much, Naledi. I have a question for Ms. Patele regarding the deposits for the rentals that should go into the trust account. I wanted to find out whether it's just the deposits only or whether you are also expecting the monthly rentals to also be reflected on the trust account. That's question number 1. And then question number 2, still related to the rentals. We are currently using what we call an inspection list. So we'd go on site with the landlord, and then we'll do a check of any defects that we can see, and complete the inspection checklist will be signed by both the landlord and the tenant. I heard you say that we should also use the mandatory disclosure form for the rentals. So I just wanted to be clear whether we should drop the inspection list that we are currently using and focus on using the mandatory disclosure form for the rentals, because in our case, we were using the mandatory disclosure forms for the sales in terms of the properties. And also just in terms of the trust account, I saw in your presentation, you mentioned that the trust accounts have to be audited and that you are also asking for the financial statements. Is it just for the trust account, or do you also want to see the main account of the company? I think those were my 3 questions. Thank you very much, Dineo.
Thank you, Dineo.
Okay, thank you. With the first question, rentals, yes. We have section 54, it says immediately after receiving the rentals or monies, they must be immediately deposited in a trust account. So this will also include not only deposit, but the monthly rentals that is being received. It must be immediately deposited in the trust account. The inspection list, what I can say is that the mandatory disclosure form is prescribed. It's mandatory. So I can't say that you must stop the inspection list, but what I can say is that mandatory disclosure form is the requirement of the Act, and also that non-compliance, if you look at section 67(4), it may attract disciplinary processes. So hence it is mandatory and is prescribed. So it's a requirement. So in terms of the inspection list, I think it's a decision that can be taken by the property practitioner together with the landlord. But I'm talking to the prescriptions or the prescripts of the Act. We are required to ensure that we have a mandatory disclosure form completed.
Okay, thank you. Or you still want to continue, Ozdino?
I'm not sure about the last question, if I have already asked, in terms of the audit report and the financial statements. Yes, we are required to ensure that there is submissions of the audit report at the end of financial year 6 months later. The financial statements have to be audited, but those are not required to be sent to PPRA. An inspector will come and request the audited financial statements, and therefore they can then look at them at that point at an inspection. At the moment, we require only submissions of audit reports. Thanks, Naledi.
Okay, thank you for that. The time is 12. I'll take the last 5 questions so that we can close. The last one I'm taking from the chat, then I'll go to the hands. Sonia says, for you, Ozdino, again, good morning. Do we need to complete MDF form for properties that we are doing management for if it has been 20 years?
Yes, I think I did answer this question at the beginning, to say that you may have really been responsible for the management of the property, but as new tenants are coming in, the mandatory disclosure and also the circumstances or the status of the state of the property do changes. There could be structural defects, there could be any other defects that continuously surface in the property, so those need to be disclosed. Therefore, the mandatory disclosure form is a prescription from the Act itself.
Okay, thank you so much. Let's go back to the hands, Martha. Try to unmute button, colleagues. It's at the top at the menu bar next to the camera icon. Martha?
Good morning, lady. Can you hear me?
Yes. Please ask.
Okay. Yes, my question is on MDF forms. Are they already available on the PPRA website for us to download? And yeah, the next question then it's on FFCs. I also realized that the company name is no longer reflected on the FFC. So I would also maybe like to understand why, what could be the reason for that. Yeah, those are the only 2 questions. Thank you.
With the FFC, can I propose, colleagues, we're having a webinar with FFC executive next week, Tuesday, to answer everything on the portal, registrations, the new system. Her name is Advocate Deborah Weil. But I don't know if Ozdino can attempt to answer it. She does not come from FFC unit. She's in the inspections audit compliance, but maybe I can allow her. I was just saying, Martha, you can come back next week, Tuesday, on that webinar, and maybe we can ask that question again. But I also put my email address on the pin. Maybe email me, I'll forward it to Advocate now after the webinar, and then she can answer that question as well. But Ozdino, where MDF, is it on the website?
Yes, as far as I know, it is. I also can check, but the last time I've checked, we had it, and it can be used. Maybe the other thing that I also can point out to say that it's not necessary for property practitioner when they use or download the MDF to use the PPRA logo. You can put your own logo there, because then it will talk to your company. So it's not necessary to use the PPRA logo. You can remove PPRA logo and use your own, but it is there on the website. And with regards to the Fidelity Fund certificates, I'll also refer to Regulation 22, which actually gives us the template how the FFC should look like. Remember, this act is very prescriptive. It says to us we should not include certain information. Hence, all those information in the old act, which have not been provided for in the new act, has been done away with. But I think Deborah will give you a very detailed response. Thank you.
Thank you for that. Let's go to Peter. Last 3 hands, Peter. Peter. Okay, Hanley, please unmute.
Hi, lady, and
Yes,
everyone
Peter.
else. How are you?
We are good. You can ask your question.
I'm good. I had to know with regard to my question already. She's referring us to next week Tuesday. Because it's a bit frustrating because the system for to register our agents and our candidate agents from online, right, is back. And once it came back, they cancelled the manual system. But after agents have registered online, no reference numbers are coming back. And without reference numbers, agents are not able to pay for the FFCs. So one agent of mine even took initiative to go to the offices. He could not be helped because he didn't have a reference number, and they said he cannot help him manually. So that is a serious problem that we are facing, and it's really frustrating.
Okay, are you able to send me an email? Then I can ask the FFC supervisor to help you today with the query. My email is, I pinned it on the chat. Are you able to email me?
I will be able to email you, Naledi, and thank you for that, because I've sent thousands of emails. Emails are not being responded to. So maybe if I send to you, at least I'll get attention.
No, it's fine. We will help you. I will escalate it. Let's go to another hand. Michelle?
Hi, it's Michelle speaking. Mr. Langhoven, I just wanted to know, it's difficult to get onto the FIX site to get the forms to fill in so that we can do that stuff for FICA. Can I just maybe email you and get more information how to do this?
Yeah, you're welcome. I'm not sure what forms you're referring to, but you're welcome to send me the question, and I'll respond to you. You can also have a look on the website. I think most of the information you would need is on the website. But send me your question. I'll respond to you.
Okay, thank you.
My email address is in the chat box.
Okay, thank you. I got it. Thanks.
All right, we're going to close the search. Okay, there's a last hand. Maybe let me not disadvantage you. Henley, please ask before we close.
Good day. Can you hear me?
Yes.
It's regarding the MDF. If the owner has no knowledge of his property, let's say he's been living overseas for a long, long period, what would the best option be? At the moment, we are using an additional addendum, which is drafted by an attorney at some other seminar that we've been to, because quite frankly, the owner cannot declare anything if he has got no knowledge of the property. What is the correct way acceptable for the PPRA in this regard?
Okay, thanks for the question. The owner then, in this case, ma'am, she must give you authorization. When you look at the MDF, as it says, is that any person can actually complete the MDF, provided they have been formally authorized. So in this case, I would suggest that the owner must duly authorize you, maybe submit a letter or to say that I'm authorizing so and so to complete the MDF on my behalf. And then the person who now complete will then certify to say that I've completed this MDF on behalf of so and so, and this information is correct, and it's also something that has been now communicated. So as long as we can obtain an authorized document or authorized powers to complete the document, it is acceptable.
My concern there, sorry to just come back to that, that is a very risky thing to do for an estate agent. It could put you in jeopardy because the questions there is very most definitely, would concern me. I am not an expert. I cannot say whether there are roof leaks or anything has been repaired. And, I don't want to be at risk when it comes to legal situations. So would it be suffice if I would just say that the owner lives, according to my own knowledge, in the addendum, we have that. So I assume that would be okay, because the owner, I had a case where an advocate advised the owner that you have no obligation to declare anything because it can put you in jeopardy. You live overseas. You haven't seen the property for 10 or 15 years. But then for me, I don't want to be at risk as well as an estate agent by declaring this, and the other. And then the purchaser turns around and sues me for declaring certain things that I'm not an expert and I'm not the owner. So would it be okay just to say that the owner is not aware? I would, in my addendum, I would specify on my inspection the following. You know, I would actually only be able to disclose visible defects. I cannot, you know, I could see if there's a sign of a current roof leak, but I don't know whether anything was maybe, you know, which is not visible, which is the history of the property that's been leaking for the last 3 years and concealed. I wouldn't know whether anything was concealed really. So
Okay.
are we doing the right thing by just doing the addendum that was drafted by an attorney at some of the seminar that I attended? So I feel that is important. I don't want to put myself at risk by declaring detail on the property, because it actually becomes part of, if there's a court case later on, you will have to verify what you declared.
Okay, let me start from what the section provides. Section 67 says, before you take up any mandate, you must ensure that there is a mandatory disclosure form signed. But it then, on the disclosure itself, it says that any person can do that as long as they're authorized to sign. So first of all, when you take up this mandate, there must be an MDF that is still sitting there, that has been signed by the owner. The addendum, I do understand that the addendum is there, is part of the contract, but there is a requirement in terms of Section 64, Section 67, that mandatory disclosure form must form part of the contract. And therefore, it even further says that where there are any civil claims appearing, they can then say that there are no defects, and therefore those civil claim or action can be instituted against the property practitioner. Number two, the PPRA, in terms of the Act, can implement Section 67 and found to in contravention of Section 67. So it's something that then you have to look into and say, am I contravening the Act as a property practitioner taking this mandate without mandatory disclosure form? That's number one. Number two, there is a chance that there will be a civil case or civil action instituted by the purchaser or by the tenant. So you have to weigh those two things from your own perspective, because those are the consequences of non-compliance with Section 67. I think I have covered the answer.
Yeah, thank you. But it still remains quite a risk. I think they should really look into this, because it's not a good idea to put us at risk to declare stuff that we're not aware of.
Then have to take.
Yeah, thank you.
Thank you for that. I see a comment from Sonel. Thank you, Philip. Have a lovely day. How, Sonel? Only Philip, only. Huh? I'm joking. We are at the end of our webinar today, and can I allow maybe the speakers with the last remarks? Ms. Mukwebo, do you want to say anything before we close? Can I start with you?
Nothing much. Just thank you for the opportunity for letting us share the work that we do at the FIC. So I just hope everybody found this presentation insightful, and it will help them on their day-to-day and in future. So thank you for your engagement. It was very insightful also to learn about the PPRA's regulations and also other mandates. So thank you.
Ms. Mphahlele, any comments?
Thanks, Naledi. Just to say thank you for the interactive session. And I welcome all the questions around mandatory disclosure form, because it's quite critical that we all move in the common understanding and we implement the Act. If there are additional questions around the mandatory disclosure form, I'm happy to respond in writing, and you can then address them to Naledi. Then Naledi will give it to me and for me to provide a response. But over and above that, thank you for everybody who participated and be present today. Thank you.
Thank you, Mr. Langenoven. Is he still in the
had to
meeting?
attend.
Oh, okay.
No, sir. He had to attend another engagement,
Oh,
so he
okay.
has
No,
left.
great. All right. No, thank you so much. As we conclude today, I want to extend my sincere appreciation to our speakers and our guest speaker supporting Ms. Mukwevo for the knowledge of, we've learned a lot from these two presentations. And for everyone who joined today, because I know you are busy, you took your time to come and engage in this discussion and the participation, the questions that we've raised. And we believe that the session has enhanced your understanding, especially on money laundering trends and typologies within the property sector and also inspection processes, and especially around compliance. We encourage you, colleagues, after this session today, just apply what you've gained today in your daily practices, and you can tell even other colleagues, and just transfer that knowledge to others. If you still have questions and the session has ended, please email me, take down my email and email me. I will forward those questions to our speakers. They will still give you answers even after. If you remember something, they're always available every day, and we will help you. The presentation and the recorder will be on YouTube. The slides I will share latest today to everyone who attended. The email is still pinned there. We wish you a wonderful day ahead. Stay safe, enjoy your lunch, all the best in your appointments, and goodbye, colleagues, until next week, Tuesday, for the next one. Bye.
Thanks, Naledi. Bye.